Hello, and welcome to Crypto Exposed. So, the Credit Suisse aftermath has begun. The domino effect is taking place. So what does this mean for the crypto markets? Well, I hate to be the bearer of bad news, but it's not good. It's definitely not good. And I think the bigger question we need to say here at the moment is, what does this just mean for the economy and for the state of just the world right now? We're just seeing absolute turmoil. And I think we're going to go through a tough time. I really do. I don't think this is going to be anything positive right now. So I'll quickly just go through some short points of the article. I'm not going to go through the whole thing, and then I can just kind of wrap up my thoughts with it afterwards from there. So, Credit Suisse share trading suspended, sparking carnage in banking market across Europe as SVB fallout spreads. Major European banks saw billions wiped off their share prices today as fears over safety of their balance sheets swept the market. At one point, 5 big European banks saw trading in their shares temporarily halted following big falls in their share prices as the fallout from the collapse of Silicon Valley Bank continued to spread. So just to stop there for a quick second, and I'll just say this, they'll make out like halting the shares is to protect the investors, but it's not. It's really to protect the actual company, right? They're scared that the company is going to lose so much value that it's going to affect their bottom line. So they're doing it to try and protect the company from basically to basically stop from going like bust, so to speak. So again, this is where you can see they're putting in the panic factors here to try and just try and calm this down as much as possible. It shows that they're really going all out. So there's one of your first red flags just going on, and you notice that they said there was 5 big European banks. So again, this is more the stock market we're talking about right now, but we're seeing the domino effect of this, that people are worrying about their shares, and the banks basically lying about what they really hold and whether they really are solvent or not. And I think the question this next gets to is, yes, we're seeing this at the moment with the stock market, but who's to say that this wouldn't then lead on to people wanting to start doing bank runs on other banks because they're worried if their bank is actually solvent or not, and can actually provide the money that's needed or owed to their customers. So straight away you're seeing this kind of paranoia that's kind of getting into the people's minds, and how it's affecting their actions. Okay, so just move down to the next part. Trading restarted, but it was an ominous start to the day for the sector, reeling from the collapse of SVB Bank earlier in the week. Major European stock markets, including London's FTSE 100, fell as market fears quickly spread ahead of Chancellor Hunt's budget speech in the House of Commons. Shares in Credit Suisse plunged 26% at one point, was triggered by the publication of the bank's annual report yesterday, which detailed flaws in the financial reporting controls, and the announcement by Saudi National Bank, its main investor, ruling out any more funds for the troubled bank. So this is where you're starting to see the concerns coming in, right? Asked whether they would inject fresh capital into the troubled bank, Ammar al-Qadri, chairman of the Saudi National Bank, said, quote, "The answer is absolutely not, for many reasons. I'll cite the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator. We're not inclined to get into new regulatory regime." So this is now where you're seeing the domino effect, right? We've now got Credit Suisse, which is another huge bank, and it's another question of, they've had troubles in the past. Are they really in a position to continue on if they haven't got their main investor to bail them out? And it kind of sounds as well like the fact that they're saying this, it does kind of make you think that it sounds like they've actually asked for money again, right? And they've just got to a point where they're like, we're just not giving you no more money. It doesn't really sound like they're just saying this for just, no reason. It sounds like, maybe they've actually already asked for further money and they've kind of said no at this point. So it starts to give you that idea that they're in trouble. And again, this is just one other domino falling. So how far does this go? And I think the problem that happens with these kind of things is it's not just about it's not necessarily just about whether they actually are in trouble or not. When the fear kicks in for customers and they all start doing the bank runs, that's when the problem can start anyway. It could be that everything would be okay if there wasn't a bank run. But once the bank run begins on a big enough scale, that could be the problem that then causes the bank to have the issue. Because, as I've said before, a lot banks practice fractionalized banking, which basically means they don't actually have to have a one-for-one asset backing. They can actually have a fraction of the amount of money that is said to be on paper. So I'll just give you a very quick example of this. Let's say the bank holds, just to keep it simple, £1 million of customers' money. They don't literally have to have £1 million in that bank, because they can give it out for mortgages and loans and stuff like that to profit from. So they might have £1 million in paper, but they might only have, let's say, 200,000 as actual cash of customers' money. So what happens if all those customers come back and they wanted all their money? Well, they haven't got that £1 million to give back to each customer. Well, the total back for each customer. And this is where the bank run happens. That's where then they're in problems, because the customers want their money, but they can't provide the money because they don't have the cash readily available. And so this is where I do worry, because it's the domino effect of customers coming back and wanting their money, and that's what then leads to the problems because of the scare factor. So I do think this is going to cause a problem in terms of the crypto markets worldwide, because crypto markets do also follow the stock market, and if the stock market's going to be in trouble, I think the crypto market is also going to be in trouble. The economy is just, we're watching it kind of crumble at the moment. It's just going through absolute turmoil with, the Russia-Ukraine war, the recession that's basically, not being said, but we pretty much are. And then, the cost of living crisis that's going on. And now we've got these banks that are just falling before our eyes, and they're not small banks. We're talking about huge institutions. So, the more these kind of things happen, the more it's going to just affect the markets, whether it's the stock market or the crypto market. And then, the problem also comes in is, who's got money to invest right now? Like with everything that's going on, who's got money to invest? So it's hard to get things like positive price action when people really haven't got the money at the moment. They're probably trying to keep their head afloat. Some people might be even having to sell their crypto because they need the money. They might have been holding on, hoping for a profit, but at this moment they need money to pay bills or whatever. So they might even be selling crypto off. So yeah, I really do think that this could be a scary time for the crypto market. So I don't really see good things on the horizon. I mean, I hope that this can be a very, short thing that blows over. And I hope that Credit Suisse is okay, because, the more of these kind of things that happen, the worse it gets, the more the economy takes a battering. And that means the stock market and the crypto market too. So, that's just my thoughts. I really don't see this going too well, but I've got my fingers crossed that it's not going to be nothing too big. But for now, I do think this is going to have a negative impact on the price. So I think I'd just say brace yourselves, because we're in for a bumpy ride, guys. But what do you guys think about this? Have you heard about Credit Suisse Bank? Do you think everything's fine? Do you think this is just the hysteria from the backlash of Silicon Valley Bank? Or are you a bit concerned like myself? Are you thinking that this is possibly going to be, a negative thing? Let me know your thoughts, guys. Thank you very much for watching this. I do appreciate it. If you did like it, please remember to like, comment and subscribe. But until next time, take care.